Hey everybody, this is Greg Gossett with Gossett Trading and Mentoring Live, and today is Friday, March 27th, 2020. We are in the final day of the trading week, and we are now in the final hour of the trading day. I mention each day, but I think it's worth repeating. I believe the most valid time of the trading day to make your buying and selling decisions is right at the end of the day, right as the market's closing. And the reason I say this is that during the day you have the algorithms and the day traders battling it out. I consider it mainly noise. At the end of the day, you have the large financial institutions coming in. They start taking control of the pricing away from the algorithms and the day traders. They're coming in with a lot of size, making their decisions at the end of the day. So they take the price control away from the intraday crowd and move it to what, in my opinion, is the most valid price. And that is why I make the majority of my buying and selling decisions based upon what they are doing at the end of the day. So thank you all so much for coming today. I always appreciate seeing everybody here. I think we have such a great group. I always look forward to seeing you. We have great comments. We have great insight. We have great poems. And hopefully, I'll be able to teach you something today that's valuable as far as good trading principles. So thank you so much for coming. It's been a wild week. It's been a really good week. Very thankful that we had this nice rally here, and I was able to take advantage of it. And I hope you were able to make back a few losses or make just some profits. Right. So anyway, who we have? We have Dan here today. Hi, Dan. Good to see you, sir. Appreciate you being here. Evan is here. Hi, Evan. Always good to see Evan. Good afternoon to you. Kamal. Hello, Kamal. How you doing, my friend? Good to see you. Appreciate you being here, Kamal, as always. Hope you're having a good day. Zach is here. Hello. Hello, Greg and friends. Hello, Zach. It was great to chat with you on Skype the other night. And hope you have a good weekend. Hope everybody has a weekend. And Bob is here. Hello, Bob. Good to see you as well. So, all right. Well, yesterday I almost wasn't able to go live. Some technical issues with YouTube, but I pressed the button today, held my breath, and it did go live. So in the future, for some reason, if I'm not on, you will either know that I most likely had some technical problems, and I'll do my best to fix it. But just so you know ahead of time, that's probably what the issue would be. So, all right. Well, what is the market doing today? Market is down the Dow is down 473 points right now, down about 2%. NASDAQ is down 138 points, down 1.78%, and the S&P is down 40 points, down 1.57%. So we've had a little bit of breather in the market today. We were down, I believe, about 900 points earlier on, so we have cut it in half. So that's good, but we've had a big rally. We were getting up to some levels that I was a little concerned about, the move, how quickly the move happened, and then up to the technical level. So this does not surprise me whatsoever that we had a little bit of a pullback today. So, all right. Well, listen, here is the plan for today. As always, first of all, we're going to run the U.S. legal disclaimer. I know everyone looks forward to that. Secondly, we're going to come back. We're going to take a look at my current positions. I have a variety of positions, calls and puts and directional trades, kind of a mix of everything. But I'm going to talk about when I got in them, why I got in them, what kind of trade they are, and then most importantly, how I'm going to manage them going forward, either to the upside or to the downside. Then we have a couple people from the group that have a couple trades on. We're going to take a look at those as well, see where they got in, and see how they're doing. After that, we're going to come back. We're going to talk about trader psychology. Very important. The most important skill in trading is being able to develop a plan and follow the plan. The first part, developing a plan, you need to know about trading. You need to know about risk to reward. You need to know about resistance, support levels, indicators. But then you can make a plan. Once you have that information, you can make a plan. But that's only half of the battle. The larger battle is actually being able to follow that plan into the future. Sounds easy. Yeah, make a plan, just follow it. Well, problem is with trading is that you have fear and greed involved, and it gets your emotions all riled up, all amplified, and makes it pretty easy not to follow your plan. But there really is. We always talk about having an edge in the market. There really is an edge in following your plan. Think about that. Next time you want to break your plan, think about, there actually is more of an edge in following the plan than breaking the plan. So anyway, that's why I like to touch on this, on trader psychology and good trading words of wisdom, things like that, good thoughts for you to think about, or, things to digest. And so we're going to talk about that. After that, we are going to go down through my watch list. I have 3 requirements before I take any new position. First requirement is I want to see in a combination or confluence of indicators lining up on the chart, and ideally in multiple time frames. But the way that I view trading, I look at indicators such as MACD, RSI, moving averages, ATR channels. I look at these all as potential groups of buyers, and you will increase your chances dramatically of having a profitable trade if you can be in the company with as many other buyers as possible. And so if one indicator represents a potential one group of buyers and another indicator represents another group of buyers, and so forth and so on, then the more indicators that line up together theoretically means you have many groups of buyers. And like I said, you'll have a better chance to have a profitable trade if you're in the company with as many other buyers as possible, and ideally on multiple time frames. So that's what I look for first of all. A combination or confluence of indicators lining up on one time frame, ideally on multiple time frames. Secondly, after you see that combination or confluence of indicators, you have to decide, okay, does this give me a good risk to reward? Does this trade give me a good risk to reward based upon the valid support below me and the valid resistance above me? And I like to look for at least a 2-to-1 risk to reward, meaning that if I'm risking $100, I want to be able to make at least $200 or more to the upside. It's very important that you have asymmetrical risk, losing less, gaining more based upon the support and resistance levels above you. Number 3, extremely important, especially in this kind of market with this kind of volatility, is not to have too many correlated positions. And what I mean by that is you don't want to have an Apple and an Amazon and a Google and a Microsoft, right? They're all technology based. You want to have some diversification. You don't want to put your eggs into the sector into the basket of one sector, right? I'd much rather see somebody have one technology stock, one healthcare stock, one auto stock, one industrial stock, right? And I have a rule where I will not buy more than one particular industry per day. So if Apple looks great and Google looks great, I cannot buy them both. Now I can have 2 technology stocks at one time, but I just cannot enter them on the same day. And then lastly, account heat is extremely important. What I mean by account heat is what percent of your account do you have at risk, even if it is in uncorrelated positions. My maximum is 60%. So even if I have 6 completely uncorrelated positions, and I'm using a 10% position size, that is the maximum I can ever put at risk. And I'll tell you what, that one little simple rule has saved me a ton this year. I learned that from our friend Steve Burns a couple years ago, and I've really implemented it, and I'll tell you, it's important. So I'm going to go down through the watch list, going to look for those 3 requirements. If I find something that looks good and meets those requirements, I'll check off a few, look for a few candidates. At the end of the day, I'll take those candidates and I'll try to narrow them down even more with a fine-tooth comb and try to find really basically the best one of the day. And if I can find one of those, if I can, I don't know if I will, but if I do, I will go ahead and take a position in that right before the close. Then after the market closes, if anybody has any questions or comments, please let me know. I'm happy to do my best to answer them, give you my opinion, give you any clarification on anything I discussed. If there's any stock symbols that you would like me to break down for you, I'm happy to do that as well. If you do find a stock symbol or any other kind of symbol that you would like me to look at and you think would be helpful for the group before the market closes, make sure to just put a star by it and put it in the chat, and I'll do my very, very best to get to it before the market closes. So, okay, that is the plan for today. So if you don't mind, hold tight. I'm going to run the U.S. legal disclaimer, and I will be back in about 40 seconds. Thanks. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much. All right. Thanks for holding through that with me. Joe Turner, hello, Joe. Always good to see Joe. Appreciate you coming here, Joe. Joe says, this market is fierce and you want to be a buyer, but does anybody know when it will go higher? Your eagerness is down, but soon that will pass. Be careful with your money. You may lose your blank, blank, blank. I think I can fill that one in, Joe. So good. God, I'll tell you, Joe and Frank, all these poems are so great, but they're just so timely. Seems like Joe and Frank post things which are completely relevant to what is going on, but very, very good advice. The market is fierce and you want to be a buyer, but does anybody know when it will go higher? Your eagerness is down, but soon that will pass. Be careful with your money or you may lose your ASS, right? House. Oh. Dang, you got me, Joe. Mount Doji, hello all. Waiting until the end of the day to decide if I'm out of intel. Yeah, I was watching that. I have that up on the board, Mount Doji, and I think you have a chance. I think you have a chance. It wasn't looking so good before, but you know, that's why it's, in my opinion, it's good to wait till the end of the day. Hello, Marco. Good to see you, my friend. Marco's our friend from Slovenia in Europe. I hope you're holding up well there. Always nice to see you. Thank you for coming by. Hi, Deanne. Hi, Greg and all. Good speaking with you last night, Deanne. That was fun. And thank you so much for coming today. Frank says, greetings to Greg and the group. Good greetings to Frank. Good to see you. Always nice to have you here, bud. Hey, John, how you doing? John says, for those taking zinc, I had heard that drinking tonic water with quinine might help cellular absorption of the zinc. I believe that may be how chloroquine works. Could be. I don't know anything about all that, but thank you, John. I appreciate your input on that, and I hope you're doing well. Thanks for coming. Frank says, not sure if today's theme should be a hard day's night or help. Yeah. Yep. One of those two, or a mix of the two, right? Hey, David's here. Good to see you. Good to see you, Gamer. Gamer's our friend from Colorado. Hope you're doing well there in Colorado, Gamer. So, okay. Well, I'll tell you what. Let's take a look. Current positions, like I mentioned before, I do really have a mix of positions here and strategies, which I feel pretty good about. You know, I have some directional trades. I have some calls. I have some puts. Which I like. I think it's always important to have diversification, not only in the type of stocks that you hold, not only in the industries that you hold, but also very important to have a diversification in the type of trading approaches you use. If you use different trading approaches, it kind of smooths things out. And in trading, really, it's about diversification. Different types of stocks, different industries, different type of trading approaches. So I do feel pretty good about this mix that I have. Let's start with gold, GLD. I did buy gold yesterday. I bought a half position because of the volatility. The 5 EMA crossed over the 20 EMA. This is a good back-tested approach. Does not win every trade, obviously, but in the long run, it has shown to be able, it has an edge when you look at the long term using this approach. And the main reason why, there is an edge, or at least so far, there is an edge in crossover trades, is that they respect the number one rule of trading: getting out quickly if you're wrong, being patient, and staying with the trade when you're right, which is very difficult. Most people want to hold on to a loser. They don't want to be able to lock in a loser. It hurts their ego, but it's completely the wrong way to trade. You should get out quickly when you're wrong, be patient when you're right, and that's what moving average crossovers or entries above and below the 200 or 250 they do. If you're wrong, and you could be wrong very easily many times in a row, but when you're right, then you might possibly have a large winner. So anyway, I did buy gold yesterday here at 153.75. It's down slightly. It's at 153.22. No change in this for me today. My plan with gold on this moving average crossover if it goes down, which we always want to concentrate on if it goes down first, is if the price closes below both the 5 and the 20 EMA. Those are the two EMAs that I used as the cross, which happened yesterday. So I'm going to get out half. If the price closes below both the 5 and the 20, I will get out of the other half if the 5 actually closes under the 20. Trading this completely mechanically, you would wait for the 5 to cross under the 20, but I put this little filter in, and I do like it. It doesn't always work, but it fits well with my personality. You could trade this completely. Just look, I'm staying in as long as the 5 crosses over the 20, but this is my approach. So if the price closes under both the 5 and the 20, I'll get out of half. If then the 5 crosses under the 20, I will get out of all of it. If it moves up, I will scale out as always using my scaling out approach. And then my initial profit target is going to be the 70 RSI, which is right here, this blue line. Additionally, if we have a huge gap up and reversal back down, a big bearish volatility bar, that would also allow me to get out. But anyway, this was down much more earlier, slightly down on the trade, not a big deal. But yeah, just going to follow this based upon my plan. SPY. Oh, the dreaded SPY. I mean, the great SPY trade. So many of you already know this. I apologize for always repeating it, but in case we have some new viewers, I do want to go over this quickly. But I do buy the SPY every day at the close. Right at the close, I sell it. I hold it overnight and I sell it first thing the next morning. This is not based upon support, resistance, technicals. This is based completely upon long-term data of using this approach. So this is from Liz Ann Saunders at Bespoke Invest on Twitter. This backtest goes from 1993, started in 1993. Two approaches here. First approach, buy the SPY in the morning, first thing, hold it through the day, sell it at the close. If you use this approach every day, you would have actually, since 1993, you'd have returned a negative 13.9% return. However, if you do the opposite, which is what I do, and I buy the SPY at the close each day instead of the open, so buy it at the close, hold overnight, sell first thing the next morning. If you would have used this approach every day since 1993, you'd have returned a positive 634.2% return. So a lot better than a negative 13.9. Past performance is no guarantee of future results. That goes for any trading approach, but the charts here really tell the story. The blue is the buy in the afternoon, hold overnight, sell the next morning. You can see since 1993, the equity curve has done great. The opposite, which is the buy in the morning, sell in the afternoon, the orange line, has not done so hot tamale. So that's why I use the blue one. I buy in the afternoon, hold through the night, sell the first thing the next morning. Now, even though the equity curve up to date at least has shown this has been a profitable approach, there are big drawdowns in here, and I have been going through one this particular year. 2019 was great. This year has been horrible using this approach, but I'm in this for the long term. I use a conservative position size. In normal markets, I use just a 10% position size, but because right now we're under the 200-day moving average and the volatility has increased double, triple compared to normal, I'm only using a quarter position size. So with that said, I did buy yesterday at the close 261.20 and sold this morning at 253.22. So gave a little bit back. I had a few nice days here, 4 days in a row of ups, which was nice. But you know, this thing goes in clusters. You might get 4, 5, 6 days in a row of up, then you might get 10 days down, right? But I'm taking the long view on this, and so that's what it is. But I am taking a quarter position, and I will buy this again today at the end of the day. Okay, this is a directional trade on XLF. I did buy this back here on 324.20. Really like this setup. We had a confluence. You know, I was talking earlier about confluence and combination of indicators. Well, here you go. First off, we went under 30 RSI, closed back above 30. That is one approach that I use for deep dip buys. Secondly, we closed under the negative third ATR channel, closed back above the negative third ATR channel. That is also good. We had a V2 formation. Here's day 1, here's day 2, here's day 3. Day 2 washes out day 1, day 3 closes above day 1's close. That is also another trigger that I use. And then on top of that, we had a false break to the downside. See, we came down here, we made this low, we came back up. This is the bottom of the range. We poked our head under and immediately went back over. The best false breakouts are the one that just dip their toe and go, oh, that's cold, I'm out of here, and go right back up. So I did buy this at 1987 here on the 24th of March. And right now it is 21.52, down slightly, but it was down a whole lot more earlier. So far on this trade, 8.47% return, which I am grateful for. I did only take a quarter position size based upon my rules. It's under the 200-day moving average, and it also, the volatility has increased so much that I actually reduced that from a half to a quarter. But nonetheless, I am very happy that this trade is up over 8%. So right now, my initial profit target here is the 50 RSI. If it makes it up to here, rejects it, I will go ahead and get out of it. My ultimate profit target here is about 25.80 right here at about the 50 EMA. At this point, if we have a close below the previous day's low, I will go ahead and just lock in the profits. I don't want to give that all back. Okay. Apple. So what I did on Apple is I did buy a long-term call on Apple. The thing that I like about long-term calls is that they are defined risk. You know, it's the ultimate in asymmetrical risk, right? I'm risking a certain amount. It's all I can lose on Apple, but I can make 2, 3, 4 times to the upside. I don't buy a lot of calls, but in this particular market, I like the idea. Actually, this call goes out to June 18th of 2021. So I have all the way from, well, like 15 months before this expires. If it expires over 250, I'll make money. If not, I'll lose my initial premium. But in this kind of market, I like calls on the best companies in the world, the most well-capitalized companies in the world. You know, with my trade idea being that given a year, we'll probably be through all this mess, possibly have a vaccine, and things will be back to normal. And I would expect Apple to go up, but you never know, right? But I do also have a trade plan for this. It's not going to be just an all or nothing. Essentially, here's this week. We had a nice V1, big reversal, V1 bar. On the weekly, if we close below halfway of this V1 bar, if I was in a regular trade, I would get out. If we close next week below there, I will go ahead, just get out of my calls, take a loss, whatever that may be. My ultimate profit target on this on the weekly is up here at about 304. If we get up here, keeps on going, I would keep it until it closed back below. So that's the plan with on the Apple calls. Disney. So Disney I did not buy calls. I sold puts. So I sold puts on Disney down here to $50, meaning that if it does not get down to here by $50 by January 15th of 2021, I will be able to keep all the premium, which is $375 per contract, which works out somewhere between 8-9% annual return just from selling this premium. If it does get down here, I would be required to buy, and if I do get assigned the shares, I will manage it from there. But I do like that we have almost 50% protection to the downside. I do like I'm getting 8-9% in annual premium. I kind of like, if I have to buy it here at 50, I probably don't mind that. And then lastly, same type of approach on the Qs. I did sell puts down to 1-30, but these expire June 20th. So they expire in about 3 months. So on these, as long as the price stays above 130, I will be able to keep all the premium, which is also somewhere in the 8 to 10 annualized return. I have about 32% protection on the downside. I did pick the $130 level on this particular stock because we had the 10-year moving average above it. On the quarter, we have the -1 ATR channel. On the monthly, we have the -3rd ATR channel. So I like to write my strike prices on support levels on multiple time frames. So I hope that makes sense. So that's it. So down a little today, but not really a big deal compared to what the last few days have brought. And again, I really like the combination that I have here with the different trading approaches, with the directional, with the puts, and with the calls. Now let's look over here at Intel. Mount Doji did buy Intel yesterday. It was a nice setup. We had a V2. Here's day 1, day 2, day 3. Day 2 washes out day 1, day 3. Closed nice and strongly above the 200-day moving average. He bought it here at 55.50. Looks like his initial stop was a close below the 200-day moving average. We did go under the 200-day today, and now we're back over, which is a good sign because it's tested this 200-day moving average. So I think Mount Doji's trade plan here is to get out with the close under the 200, and correct me if I'm wrong. And then Steve Burns did take UGL. UGL is gold, but it's double leverage gold. He bought it here at 56.28 with the 520 crossover on GLD. And he is right about even. It's down about 6 cents. He got a little better price before the end of the day, so he's up about 2 cents. So nothing wrong with that. And I think his trade plan is pretty much similar to mine as far as the 5 crossing back under the 20. So that is that. Hey, Frank has a poem for us. First liquidity, then the buffer. 2 trillion, folks. Oh, sorry. First liquidity, then the buffer. 2 trillion so folks don't suffer. Aid for workers who don't get paid. 1,000-page relief bill now headed for the hill. Man a trader needs an iron will. Boy, isn't that true? Let me read that again, see if I can do a better job. First liquidity, then the buffer. 2 trillion so folks don't suffer. Aid for workers who don't get paid. 1,000-page relief bill headed for the hill. Man traders need an iron will. Thank you, Frank. Fantastic as always. Let me put that up there so I can post that. I'll tell you, these poems are a hit. These poems are a hit. Evan, hey Evan, how you doing? RAD thoughts. Well, okay, we were above the value zone. We did come into the value zone. We went down. We held one day. Ideally, I would like, well, we didn't even really hold one day. We went down and down and down. We do have a V2 here today. There's no doubt. There is a V2. We did close above, it looks like we might close above the 10 and the 5 and the 20, which would be good. We went under 50, over 50. It's not bad. I mean, what I do like about it is I like the 50-day moving average being halfway the washout bar. This, if I took this trade, I would use a close below halfway the washout bar, and I like that the 50-day moving average is syncing up right with that. If it were me, let's look at the weekly. Weekly's okay. I like that we had last week's big week. We've come down and we tested a half and we're above that. So yeah, it's not too bad. Just of course, like with any trade, make sure you place your stop. The risk to reward looks good to me. But if I wanted to be precise, I'd say I'd like a little bit more sideways movement, but I do like the under 50, over 50. To me, that kind of counterbalances a little bit of lack of sideways movement. So that's my take on it, Evan. Hey, Steve Burns, good to see you. Always nice to have Steve here. Always appreciate it. Always an honor to have Steve in the chat with us. And Steve, thank you so much as always for including me on your traders list on Twitter today. I always appreciate that. Thank you so much. Steve says, VIX closed at 61 yesterday. It's 9th consecutive close above 60. That's never happened before. The prior record was 8 straight above 60 from November 14th to November 25th in 2008. Today will be 10. Let's take a look-see. Over here at VIX. Yes, it is above 60. And I'll tell you one thing, we had this huge move up. Now we've come back into the value zone. I'm not surprised that we bounced once we got back into the value zone. No real setup for me here to buy it, but Steve's point is that it's the 10th day it's closing over 60, and that's never happened before. That's amazing. Okay, hey Bing He, good to see you. Looks like Bing He took Clorox at 175.05, so he is in the money. Okay, so it looks like you might have took it for that return to value V2. So let's get Bing He on the board here at 175.05. Bing He, there you go. Frank says, Steve, with all the sickness news, people probably think that they're buying the stock of Vicks Vapor Rub. Could be. I don't know. Is that a public company? All right. Hey, listen, before we go through my watch list, and I spoke earlier about the requirements, the combination confluence of indicators, the good risk to reward ratio, making sure we look out for correlation and account heat. Before I go through there, see if there's any potential trades that I'm going to take or that qualify at the end of the day. I do like to talk about trader psychology. As you know, very important, in my opinion, the most important skill in trading you can learn. Sure, you have to learn how to trade and identify support resistance. That's important, but after that, you use that so you can make a plan. But following the plan is extremely important. So, trader psychology, discipline is the most important skill in my opinion. If you're not following your plan, please, you need to work on that skill, whatever it takes. In my opinion, reducing position size is probably the best way. But there are a lot of people out there that spend a lot of time, effort, burn a lot of calories on social media to post really good, helpful quotes, trading words of wisdom, good advice, especially when it comes to psychology. And my very favorite one is Stephen Burns, friend of the show, in the chat right now. But Steve posted this over here on Facebook, which is new. There's a New Traders, Rich Traders. It's a really good channel on Facebook. So if you haven't subscribed to that, I would. But let's see what Steve says. Let your position size be your speedometer, a stop loss be your brakes, and a trailing stop be your gas pedal. All right, so we're doing an analogy to cars, right? Let your position size be your speedometer. The larger the position size, the more your speedometer is going to go up and down, right? So look at it that way. So, position size is very important. I use a 10% position size. It's so important to beginning a trade. All you have control of is when you enter a position and how much. After that, you have no control whatsoever. So, let your position size be your speedometer. A stop loss be your brakes. I mean, you would never think about going out and driving a car without any brakes, right? Never, ever. I think most of us can agree on that, but in trading, a lot of people don't do that. They don't put a stop loss. So, think about your stop loss when you're driving a car as your brakes. You need them. And a trailing stop be your gas pedal, right? You can take your foot off the gas pedal, slow it down a little bit, exit your position. But, when you think about it in the terms of a car, it makes a lot of sense. But let your position size be your speedometer. It's going to tell you how fast you can go. A stop loss be your brakes. You need brakes, and you also need a stop loss. And a trailing stop be your gas pedal. So, your trailing stop, you're going to take your gas off the pedal a little bit. But anyway, I thought this was fun, Steve. Different way to look at trading. So Steve Burns, New Traders with Traders on Facebook. It's a great channel. So thank you so much, Steve. Appreciate it. Frank, Zach says, every day Frank just subtly puts out a zinger that I always laugh at while I'm watching my office. It's good, huh? Bing He says, I queued to stop by Netflix at 363.90, but canceled after a half an hour of market open and I go to sleep. Greg, Netflix was a good setup with multiple MA crossovers yesterday. So I'm assuming it's up today then. Yeah, it had a 520 crossover. Boy, I'm not sure right off the top of my head if that's a valid one. I kind of now think that it is, just from memory. We were below the value zone. We came into the value zone. We had a higher low V2. Here we came up, had a 1 day selling off. Day 1, day 2, day 3, day 2 washes out day 1, day 3, close above day 1's close. In addition to the crossover, you're 100% right, Bing He, and you had the move, and MACD is positive. So that's good, but it doesn't sound like Bing He had that. Steve says, thanks for sharing, Greg. Thank you, Steve. Appreciate that. Bing He says, Okie, got Netflix at 363. 363.90. Okay, we've got Bing He down. Okay, Bing He. Good luck, buddy. Bing He, what's your stop on this trade? Most important question, always, right? Hey, before we go through the charts here, the watch list, let me just quickly look at the indexes. I mean, of course, look, we had this big sell-off. We did have a rally. As I mentioned yesterday, we were getting pretty close to some kind of invisible resistance. We're getting pretty close up here to a 50 RSI. That's why this does not surprise me whatsoever. We've gone from negative MACD to positive MACD. One of two things here are going to be interesting. One, if we continue to go down, then we have a new group of buyers come in giving us a higher low V1, V2. I might be interested there. If we do go back down and test these lows, which we have to keep in mind, this is a very strong possibility that we could test these lows. We would have a beautiful double bottom with the bullish divergence. We'd have deep red. We already are green. If we come back down here, I can already tell we're going to have less red. This is what Dr. Alexander, one of his favorite trades, is looking for double bottoms with bullish divergences. So just because we've rallied here does not mean we're going to have a V bottom. Very likely we could come down for another couple days, then rally back up with the higher low V1, or test the bottom with a bullish divergence. And if it does get down there, that's when I will be adding on more positions with some size. Same with the Qs, same thing, bottom, rally up near the 50. We failed at the 50. Again, if we can come back down, have a higher low V1, that would be interesting to me, and also possibly a double bottom with the bullish divergence. And lastly, the SPY, same thing. Big rally right up near the 50 RSI, rejected the 20-day. Again, if we could get another 1-2 days down and then a new group of buyers coming in forming a higher low V1 or V2, I would be interested there. Or again, if we test this previous low, which would then be a bullish divergence. Bing He said, stop loss for Netflix. Oh no. Yeah, makes sense. Halfway to the washout bar. Excellent. Frank says, a smile is more precious than gold these days. Boy, isn't that true, Frank? I haven't seen a lot of smiles out there, that's for sure. Not at all. Not at all. Boy, people in the stores, not that they're unfriendly, but they, they just don't want to get around, which I don't blame them. Okay, let's go down through the list here, see if anything looks interesting. Apple, of course, I have the Apple calls at 250, so they're still, these options are still in the money, barely. I don't really see anything on Apple here. I do like that it tested the 200-day moving average, but because I already have a call in Apple, I'm just going to let this one go. Adobe, just above below the 200. It's lost its validity here as a moving average, so I would probably look to the weekly for something, possibly again the 100-week moving average, but I don't see anything there. Amazon's down today, is holding above the 200. That is a good sign. The longer it can hold above the 200, the better it is. But I don't see anything. We've rejected this 50-day moving average 1, 2, 3, 4 times in the past 6 days or so. Boeing had a big rally. It's down pretty big today. Doesn't surprise me. Still holding the 10-day moving average. Again, like a lot of charts here, I'm going to be looking for a higher low V1 or V2. Berkshire, definitely off of its low. MACD is positive. Again, with a lot of these, I really would feel best about a moving average crossover to the upside or a test of the bottom, which we could have the bottom. I know it seems like, oh my gosh, let's not go down there, but it's certainly possible. Hey, Brian is here. Good to see you, Brian. Hope you're having a good day, my friend, and keep him busy. I know Brian's always keeping busy with something. Here's Beyond Meat, below the negative, made this low, back up into the value zone. Now we've had a day down. Now we've had a day down. Be nice if we could have a V1 on Monday, get us right, nice V1 or V2, get us back above the 10-day, but I don't see anything yet. Caterpillar, down 3% today. Similar with the rest of the charts, looking for a higher low V1 or V2. The Dow Jones Industrial, same thing, looking for higher low V1 or a test of the bottom. Walt Disney, of course, I have my puts on this down to $50, so I feel pretty good about that, but you never know. Is 48% to the downside protection enough? I do not know. We shall see. Etsy, same pattern. Facebook, just kind of moving sideways there. I don't see anything on Facebook. Gold, of course, this is down now a little bit. I did buy this yesterday with the 520 crossover. It's been all over the place today. Half position here because of the volatility, so it doesn't look like I'm going to have to do anything there. Google, I would feel much better about buying Google with a test of the previous low. Goldman Sachs, about the same. Home Depot just moves so far so fast. I'd feel better about buying this over the 200 or again test of the double bottom. IBB, same formation. Intel, oh, now Intel's under the 200, so you better watch that, Mount Doji. IWM, nothing there. Johnson & Johnson, nothing there. CarMax could form a nice V2 on Monday, back up into the value zone. Frank says Buffett has been unusually silent during this period. Yeah, I agree. I think Berkshire Hathaway has, I can't remember, 135 billion or something. Pretty smart guy, Buffett, not buying anything way at the top. I mean, even without knowing about the virus, right? So I'm sure at some point he will come in and buy a lot of stuff here at pretty good fire sale prices. Coca-Cola, nothing. Lockheed Martin, green today. Interesting. Man, this is the trade that got away. I bought XLF on this day. And Lockheed Martin is not correlated to XLF, but I wanted to be a little careful, but still nice. Under 30, over 30. Then we had the V2 back over the negative third ATR channel and false breakout to the downside from this low. That would have been a fantastic trade. My gosh, that'd have been a 23% trade. Well, you don't get them all, right? MasterCard down today. I am glad that I got out of my MasterCard calls a couple days ago. So, that's why, it just goes to show you, I like to take some profits on some things on one day, not on the others. But obviously now at this point, I'm really glad I did sell that call that I bought and had a really, really nice gain on it. McDonald's up a bit, good relative strength. Merck, don't see anything there. Microsoft still above the 200. That is positive. A lot of resistance up here though. So again, I would feel much better about buying Microsoft down here at the previous lows. Netflix, being he bought it at 363.90. It's just a little underwater now. I think the market has turned down, yeah, a little bit. 615. It seemed like it was rallying pretty strong there for a minute, giving back a couple hundred points. Philip Morris hanging in there. PayPal off of its highs. Qs, don't see anything there. Possibility for a trade on the Qs coming up would be the 5 EMA crossing over the 20 EMA. That's a good back tested approach, so I would be looking for that. I have the puts on here, of course, that I sold to 130, but I don't see any directional trades setups right here. Silver down a little bit. S&P 500, of course, we already talked about that. I will be buying this at the end of the day. Teladoc up nicely today, so this is kind of one of the safety plays. Was above the value zone, that came bump right back in and bounced boom right from there. So bonds, what are bonds doing today? Bonds have rallied pretty strongly off the bottom. Boy, they just pegged the 200-day moving average. I don't see anything here. Tesla's down a little bit today, but not bad. Possibility of a higher low V1 here, possibly a V2 on Monday. Twitter, no. United Airlines down 6% today. You can just see everything has the same pattern. Big rally right up to the 50. That's where I was concerned about it. That's really why I was not taking any stock positions in the last couple days, new stock positions. And, I was right this time. Doesn't mean I'm right every time, but if I see 100 setups where it goes from 30 up to 50, I think more than 50% of the time, in my opinion, when it gets to that 50 RSI, that's a little stretched. It needs a little air let out of it, either by a couple days down with a higher low V1, V2. If it just keeps going up, then you can always get it if you have a crossover. UNG, UNH, had problems with that 200. Oil, talked about that. I did buy some I did buy some calls on oil for an account that I manage for a friend. Bottom at bought $5 calls out to January 15th. So, gives about 9 months. And we'll see if we have an oil rally, but I liked how we moved sideways here. I liked how we created this base. Volatility got lower, which means calls got lower, which is a decent place to buy them. VIX up 10% today, came right into the value zone, and that's where it caught a bid. Verizon's just kind of been all over the place. Walgreens, I don't really see anything there. Walmart still underneath the 200-day. Energy down 6%. Financials, of course, I have that. Bought that with the V2 under 30, over 30, under the negative third, over the third. Throw the nice false breakout to the downside. Did hit a couple profit targets in the last couple days, so I have taken some off. And that's really one of the reasons I really like to take profits. If this goes crashing down the rest of the day or tomorrow, at least I took some profits off at higher levels, at profitable levels. And I took some chips off the table, which if it keeps going up, I'm still happy because it's going up. If it goes down, well, I don't have to be happy about it, but at least I'm glad that I took partial profits at profitable levels, which mitigate the loss. So actually, at the end of the day here, I'm going to have to watch this 2062 level, because if that is the low, if it closes below yesterday's low, 2062 is yesterday's low. Real estate, same pattern. Utilities, same pattern. You know, it's up today a little bit, but right here in the middle, you're running into the midline of the 1 and the -1 ATR channels. You're also running into the 50 RSI. As a matter of fact, we may have rejected the 50 today. Let's see. 49.03. Hasn't quite tested it, but getting a little stretch, stretching that rubber band. XLV, same. And Zoom up today, up 7%. So honestly, at the moment, I do not see any new trades. You know, I don't think there's any real clear setups here. Not that I see, not that offer a good risk to reward. So I have the gold, going to keep the gold. SPY, of course, got clobbered on that one overnight, but at least it was a quarter position. I will be buying this again today. Boy, it looks like I might be buying that lower than it was. XLF, going to watch that at the end there. Apple, boy, Apple's really sold off at the end of the day, hasn't it? Those are calls. Disney puts down to $50 and Q's down to 130. So I have some directional trades. I've bought some premium. I've sold some premium. Feel like I have a pretty good mix. Intel, ooh, Intel's selling off there. Looks like it's under the 200. UGL is down. Clorox down a little bit for Bing He, and Netflix down. V1 now. So if I look over here, yeah, now we're down 857 points. Well, that makes more sense. I was reading the U.S. rig count minus 44. So, you know, the way that I look at that is the more rigs that go out of business, the fewer rigs are going to be producing oil. The fewer rigs that are producing oil, the less oil, ultimately from a supply and demand equation should lead to higher prices. But of course, we never know, right? Mantoji says, looks like USO has tested a low a couple times. Yeah, like today. Yeah. Well, not quite, right? Not quite. At least on my chart here. Well off of its lows today, though. Dan, Greg, you seem to point to the 20-day moving average and say 50 RSI. Am I missing something? Oh, geez, Dan. Oh, you know what? I know what it is. I'm pointing to the 50 RSI. The 50 RSI would be right about here. See, we're at a 42. Right up in this range is going to be the 50 RSI. You just can't see it. It's invisible. So I think what's happening, Dan, is you're seeing me point out the area where it is the 50 RSI, and you think I'm pointing at the 20-day moving average. So sorry about that, but you know, let's just pick something else. Apple. Okay, Apple's 50 RSI is going to be right about here, and I keep pointing to the, because it's right in the same space that the 20 EMA is. Does that make sense? So I'm not pointing at the 20. I'm pointing just in this area where the 50 RSI would be, and it just happens to be lining up with the 20, which even shows that it's more resistance there. Greg, did XLF not hit 5% down today? Yeah, it did. But my 5% down rule, Zach, is from my entry, is my emergency, not right? So if it goes down below 5% from my entry, then that's my emergency stop. But I'm still in the trade up here, and it, even though it did go down 5%, it didn't go down 5% below my entry. Does that make sense, Zach? You could use a stop like that. You could use a trailing 5% stop, but that would just be a different type of stock. But my emergency stop is a close below 5% from my entry point, not from open profits. Mount Doji says, I'm out of intel. Boy, what happened? Did we get some news? Let's take a look. United Airlines warns 8 isn't enough to avoid fork. Is that what happened? Okay, so we're out of intel. I don't blame you. Dan says, thank you. Okay, hope that made sense, Dan. SMH, learning every day. Thank you for clarification. You're certainly welcome. But Zach, you bring up a good point. Your trailing stop could be 5% from the high of the highest point in the trade, like with XLF. 100%, or from 5% from the previous day's close. That would be totally fine. There's so many different plans. There's so many different things you can come up with. It's finding one that makes sense to you, because not every plan is going to work every time, but at least you have a plan. But yeah, my plan, if it closes below 5% from my entry, not open profits. Okay, well, gold is fine. SPY looks like I'm getting a little bit of a discount on for my overnight SPY trade. XLF does look like it's closing above yesterday's low. Boy, Apple just took a whooping here. Looks like it might close under the 200-day moving average. Then we're under, over, under. It's starting to it's starting to lose its effectiveness, that 200-day moving average. If a major moving average, it's up and above, up and below, and above and below, and all that kind of stuff, you may have to go to a higher time frame to look for something that act as more legitimate support, like down here, the 213 level. I mean, it's possible we could get down there. So it's an important concept, though. If a major moving average on the time frame that you're trading is losing, it's not holding as support, find a moving average lower that has been acting as support, or go to the next time frame up, like the weekly, and look for something there. Okay. Zach says, I do like to use a trailing stop with a lot of trades, so that's why I always thought that, but your explanation helped. Okay, good. You know, I don't use the 5%. When I'm in the profit, I don't use a 5% to move down as an emergency stop anymore, but I do use a close below the previous day's low, right? So that's a trailing stop also. So whether you use 5%, if you just want to use a standard 5%, that's fine. Sometimes it's going to work, sometimes it's not, but at least you have a plan. Okay, speaking of plans, if XLF closes below, ironically, the 5% from yesterday's close to where my stop is right about 5%. So how about that? But different, right? I'm not basing it off of just 5%. I'm basing it off of a close below the previous day's low. So, but that one looks like it's going to hold. But listen, if you used the 5% stop and got out, and I didn't because it closed over, who knows? It might go crashing down. Then, you know, it would have been good that you got out. But if you hit the 5% stop and then it closed above, and then the next day it went racing up, then it might work. You know, it works for me sometimes, works for you sometimes. Nothing's ever going to work for everyone every time. Frank says, I actually have my eye on the x-axis right now. Time, price will follow. Ah, interesting. All right, so it looks like the only thing I'm going to be doing here is buying my overnight SPY trade. Tell you what, I'm very happy with this week. A little give back today, that's okay. I was expecting it, but glad that I did get rid of some stuff. Glad that I did keep some stuff. But that's really what it is with trading, everyone. Having different approaches, different exits, different uncorrelated positions, getting out sooner on some, getting out later on others. It just smooths everything out. And sometimes you get out of a short-term trade and then it goes zooming back up and you're like, dang it. But then you're glad that you had that longer-term trade that it didn't get you out of. Hope that makes sense. All right, let's take a look over here. SPY. So I did buy the SPY at 253.42. $253.42. Okay. And that's the only trade that I took. All right. So listen, if you have any questions or comments or advice or observations on anything, please just go ahead, put it in the chat. It'd be fun to talk about. Before we get to that, just quickly, just want to do my daily plug. Hope that's okay, but I do want to let everybody know that I do offer private one-on-one coaching and teaching lessons in the evening time via Skype. I do have a course. It's a one-on-one course, 5 sessions. Each session is between 2 and 3 hours. It's usually 3 hours, just depends how long you can keep your eyes open. But I teach you everything I've learned over the last 24 years as a full-time trader. I teach you everything I've learned from all of my teachers and mentors and coaches over the years, like Stephen Burns and Dr. Alexander Elder and Kerry Lavorne and Larry Williams. But I think it's a really good course. When you're done with the course, you should be able to look at any market condition, understand where to get in, where to get out, all sorts of different approaches, basically 5 different approaches. But the format of the course is the first part of the lesson, about the first hour and a half. I teach. Second half, I ask you questions. I have you teach it back to me. We do a lot of chart study. I have you break down the charts. Tell me what's good here. Tell me what's bad. Where's support? Where's resistance? Where's your entry? Where's your stop? If you do have an entry, where's your trailing stop? And, when you read trading books, a lot of times, they'll talk about the setup and then they'll show a picture and, most of the time the picture that they show works, right? But when you do the class with me, you're going to find out that a lot of the setups don't work because we go through day by day, look for all different type of setups. And so, not a surprise to me what this market has done. A couple weeks ago, I think it was with Andrea, maybe. She's one of my students. We were going through, and boy, we hit a really bad streak of trades. They were solid trades. They were the correct trades. But doing this with my students, I really realized, there's good times and there's bad times. But I also know that after the bad time come good times again. So, if you're interested in taking the class, it is $1,000. I know it sounds like a lot of money, but I think really for everything that you're going to learn and the experience that I'm going to teach you, I think it's worth every penny. I really, really do. And I think you're going to be kind of in control of your own destiny on trading and not having to rely on anyone and so forth. So it's an investment. So if you're interested, reach out to me. You can send me an email. The email's in the description of this video down below. You can also send me a message on Twitter. Before I take on a new student, I just want to make sure that we're a match. So I like to have a Skype call with them, about 30 minutes to an hour. It's free. There's no pressure from me to sign up. I promise you that. I am not like that, but I just want to get to know you better. I want to understand where you've been with trading, what your challenges are, what your goals are, and of course you can ask me any question, but I just want to make sure we're a right fit. Want to make sure our schedules would line up correctly for the course, and that we kind of have the same goals in mind. There's a lot of courses out there, they talk about 40, 50, 60, 200 times return on your money. It's baloney. I mean, you can do it, but there's tons of risk, right? I mean, what I teach is somewhere between 12, 15, 18% a year. That's my yearly goal. So, if you're looking for higher rates of return than that, I'm probably not the guy for you, right? But anyway, if you're interested, like to have that Skype call, please let me know and send me an email, or you can send me a message on Twitter. I always get Twitter and Skype mixed up, but on Twitter. And then if you like today's podcast, I would really appreciate it if you'd hit the thumbs up button. I've been having some issues with Google. As you know, I'm in Google jail or YouTube jail for some reason. I think because of the AI. I don't think we've talked about anything too controversial. I don't think, but who knows why they're doing this. But anyway, some likes certainly wouldn't hurt. So if you wouldn't mind before you get out of here or click out of here to hit the thumbs up button, I would appreciate that. Frank says, oh, okay, I actually have my eye on the x-axis right now. Time, price will follow. There you go. Oh, thanks for that like, whoever that was. I appreciate it. I appreciate it. Oh, you know what I forgot to show you was the choose wisely. Well, I did choose wisely, actually. I didn't take anything today, right? But before I actually look to enter a trade, I've kind of put this in here, and this goes for me and it goes for you. But choose wisely if when you're getting ready to take your trades. Think to yourself, do I really need this trade? Is it really important? Is it that good of a setup? Do I already have this kind of stock? If you're looking at a technology stock, do I already have this kind of technology stock in my portfolio? Do I really need to add more risk onto this? But just all in all, right? Correlation, account heat, does it have multiple setups in multiple time frames? Is there a confluence combination of indicators? But, kind of use this as your mantra. Choose wisely today, whether that's picking your trades or doing anything else. And that's from Diana Cooper. I don't know who Diana is, but thank you for that, Diana. Okay. Kamal says, I covered my 154 GLD calls for 2 cents and sold Tuesday's GLD 154 calls for $1.25. Okay, good. Good. So Kamal's selling some premium up there with the calls, right? Kamal, do you still have the underlying position on gold? So essentially, or did you buy a call and sell a call? I can't remember now. Or is that a or is that a cover call on gold? Yeah, gold sold off at the end of the day, didn't it? I mean, if we look here at the 5-minute chart, gold bump, S&P bump, XLF bump, Apple bump, big down day. Disney really sold off, and the Qs. Yep. I'm telling you, I would not be surprised, everybody, if we come back down here, test these lows, but I think that would really be a nice setup. If we get down here to the lows, we would be above the third ATR channel. You can see down here, we were at the third, fourth, fifth ATR channel. If we get back down to the same place, we won't even be to the negative third ATR channel. That's called an ATR divergence. So we'd have an ATR divergence, most likely an RSI divergence. We'd have a MACD divergence. So that is really where I'm looking. Kamal says, yeah, I have the April 3rd 153 call. Okay. Gotcha. So you bought a call and sold a call. Okay. Well, what a week. What a week. I'm very thankful for this week. It was a nice recovery week for us. And just kind of dig away at some of the losses from the beginning of the year. But let's take a look there. But I do feel good about the combination that I have here. A lot of protection to the downside, limited on the puts, limited risk on the upside with the defined risk of the calls. Have some metals in there, half position, and XLF, and then the overnight SPY trade. So I feel good about this. I do feel good about this combination of trades and trading strategies. All right. Any update from anyone on what's going on with their quarantine, what's happening in their cities? Anyone going stir crazy or getting cabin fever? I'll tell you what, if I couldn't go out hiking in the mountains, boy, I would be in sad shape if I had to stay in my house all day. But thankfully I'm able to do that. But who knows? Maybe in some places you're not able to do that. Frank says, gold is in demand when currency is not trusted. Yet if you buy gold on the exchange, you are paid in currency. Go figure. Yeah, that's true, isn't it, Frank? I know that the price of gold, paper gold, spot gold, and physical gold has kind of decoupled. I've read a couple articles, and I know people in that business. And apparently, if you go to a coin dealer, your local coin dealer, they do not have much supply of gold or silver. Like sometimes they have no supply. It's just the gold that people bring in on a daily basis that they have to sell. And I know that like silver, from what I've heard, is when you go to buy physical silver, it's trading at like $10 above spot. Unbelievable. And gold's paying like $7 or $10 above spot. Have you heard of this as well, Frank? Mount Doji says, I've been reading a lot. Good. What have you been reading, Mount Doji? All right. All right. Trump orders General Motors to make ventilators under Defense Production Act. Okay, well, listen, if anybody has any other questions or comments or anything, be glad to read them, glad to talk about them. While I'm waiting for those, just want to let everybody know that I hope they have a nice weekend. I hope they can go out and do something nice for somebody today. Maybe call somebody that doesn't get out much. Maybe see if they need a little bit of help, or just call them, tell them you've been thinking about it. I'm sure they will really appreciate it. It's a weird time for all of us. We've gotten out of our regular schedules, and who knows? Just a call to somebody really might brighten their day. You never know. Dan says, since the beach is closed, I can't do my beach runs. Now I exercise at home. Ugh. Yeah, that's a little tough compared to the beach, isn't it? Mount Doji says, just finished this book called Edge, Turning Adversity into Advantage. My mom got it for my birthday. Finally had time to finish it. Moving on to Don't Fall for It by Ben Carson. Excellent, Mount Doji. That sounds like a good use of time. For sure. Turning adversity into advantage. Well, you know, the adversity in the market here, I think, will lead to some advantage for people. So it's relevant probably in the market and whole other things, that book. Bing He says, laughed out, last hour spell down. Yep. Frowny face. Mount Doji, Don't Fall for It is a book about white collar crimes and scams. I'm excited to go through it. That should be interesting for sure. Let us know how you like it. Frank says, yes, precious metals are their own world. Yes. Mount Doji says, have a good weekend, friends. Thank you, Mount Doji. Appreciate it. You have a good weekend. Enjoy your books. Kamal says, last Friday was the same SmackDown, last 30 minutes. Yeah, it's not too surprising. There's so much headline risk right now, Kamal, right? Over the weekend. I think, what is it? The last 6 of 7 openings on Monday were lower than Fridays. You know, you have accumulated headline risk. You have, basically 3 days of headlines that are going to be repriced on Monday. So yeah, I imagine that my overnight SPY trade, here's a prediction. I don't make a lot of them, but I feel pretty comfortable. My SPY trade is either going to open up fairly large or down fairly large. That is my prediction, but I'm not calling which way. Bing He says, we got 5 MCs for any flu-related symptoms, and it serves as a quarantine order to stay home 5 days. Have you had any symptoms, Bing He? Are you having to stay home? Yesterday, I felt a little under the weather. I really did. I felt like I had a little cough. I felt maybe just a little bit of a fever. But of course, your mind goes wild. I have hardly been around anybody. I actually went into the store the other day and I wore my kerchief around my face. I looked like a bandit from the West. That's all I had. I didn't have a mask. Okay. Kamal says 5% limit down. Be surprised if you don't see it 5% down. Could be. I would not surprise me at all, Kamal. Would not surprise me at all. You know, I'm in this weird position right now with the markets. I don't mind if they go up, and I don't mind if they go down. Because like I said before, I really am looking for that double bottom with the bullish divergence. I think it would be excellent long-term risk to reward setup. If it goes up, I'm happy. In a strange way, if it goes down, I'm okay with it because I feel like I might be able to get into some decent positions lower. But who knows? You know, it's always a yin and yang to it, right? Bing He says, yes, now some people with such symptoms scared to go. Scared to go. Frank says, riding high just a month ago. This reality is amazing. I know, it's true, isn't it, Frank? I mean, things have just changed. I mean, like our entire culture has changed. I saw some pictures of Las Vegas. I used to live in Las Vegas, so just to see the strip completely deserted, it's just something right out of a movie. Zach says, have a great weekend, Greg. Thank you for the streams this week. Thank you, Zach. Appreciate it. Appreciate you guys coming. Thanks for clicking around trying to find the channel. I know it's been tough for people to do because of this YouTube issue, but I hope they get it fixed. I really, really hope that they get this fixed and at least they share it out there because all my subscribers don't even know that it's on. Gamer says, happy weekend for everybody. Happy weekend to you, Gamer. All right. Remember, try to go out and do something nice for somebody today. Just a smile or a wave from a distance. Say hi. Or give somebody a call that, you think would appreciate somebody checking in on them. I think it really could make their day. So Frank says, it's really perfect to go after the bottom by selling a put. Yeah. I'm actually looking at selling more puts, but I want to wait for volatility to pick up to the downside and then do some eyeing of some lower prices with more protection, but still getting a good premium. But yeah, I agree, Frank. I mean, that's, obviously you sell a put, you do get premium every day and you get protection. And at this point with the volatility, you get a lot of premium on an annual basis. So yeah. Yeah. If you do any of that, Frank, let me know. All right, everybody. Thank you so much. Really appreciate you being here. Hope you have a nice weekend. Be safe. Take care of yourself. Get some sleep. Eat well. Exercise if you can. And, spend some time studying charts, right? You will see if you go back in time and study charts, there will be a time that's very similar to this. And just take a look and see what happens, right? Just do some simulation trading. Okay, thanks everybody. Take care, all right? Hope to see you Monday, and I look forward to it. Bye now. U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.